Good day, this is Shauna Casey, and welcome to this SOS Solutions webcast, SOS ESPP Expense Application. Since this webcast is dealing with SOS products and services, no continuing education credit is available for attending. Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the questions and answers panel of your GoTo webcast console, and we will do our best to answer them as they come in. Any questions that we don't get a chance to address during the webcast, we will follow up afterwards with in an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. You can also find the link to the materials under the Event Resources tab on your GoTo webcast console. This session will also be recorded, and we will send a link to the recording and materials in the next day or two. I hope that all of you are familiar with Stock and Option Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. SOS provides interim and permanent placement, expert project resources, and total outsourcing solutions. To learn more, you can visit us online at www.sos-team.com or call us at 888-SOS-0199. Next, I'd like to introduce you to our speaker for today's session. We are pleased to have Julie Kenya on the panel today. Julie began working in equity compensation in 1993, managing the AT&T Long-Term Incentive Program. She led the stock administration team during AT&T's challenging years of corporate transactions up through the final acquisition of AT&T Corp by SBC Communications. Julie joined the team at SOS in 2006 and has been assisting clients with an extensive array of projects, including mergers, acquisitions, spin-offs, stock option exchanges and repricings, conversions, vendor searches, stock plan best practice reviews, training, day-to-day administration, and accounting related to reconciliations. Julie became a certified equity professional in 2008 and is a member of the professional services group here at SOS. Next, I'd like to show you the standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. As I mentioned, the materials are available on our website, and here again is the link. Thank you all for joining us today, and with that, I will turn this presentation over to Julie, who will introduce our topic and cover the agenda. Thank you.
Thanks, Shauna. Today we're going to, I will cover with you a high overview of ESPP expense, what our new application can provide to our clients, and some of the features of our new application. And then, of course, we'll talk a little bit about how you can learn some more information. So first, let's talk about ESPP expense, and I'm going to try to tackle this from the SOS interpretation, if you will, as it relates to ESPP. And basically, we know that there's two types of expense that we have to account for when we talk about ESPP. The first being non-modification plans, which we call the simple plans. Those are ones that typically have the standard stock option type expensing model, if you will, where you estimate based on known factors. And the key known factors for ESPP, of course, are the estimated purchase cost, which is really based off of your estimated shares and the estimated purchase price. And we determine those using contributions and fair market values. Then at the end of the purchase, we actually do a true-up based on actual outcome. And again, that's based off of the actual purchase cost, the number of shares that were actually purchased times the purchase price. The other expense topic really is the modification plans, the complicated plans, if you will. Those are the ones that seem to cause us the most pain and our clients a lot of pain. These are plans where there are changes due to contribution increases creating new expense, or reset or rollover features where the incremental expense has to be computed so that there's new expense being recorded because of a new grant and incremental expense being recorded as well. Those plans become very complicated, and it can be compounded by the number of potential rollovers you may have in your particular offering period. So we've created an application where we're hoping to be able to bridge the gap for our clients. Not all equity platforms are able to support ESPP expensing. Some have absolutely no support whatsoever, and others have a very limited support where they may look at the expense at an aggregate level versus participant or department level. And of course, very few we find can actually support modification accounting. It's almost non-existent from what we've seen. And so then clients who have contribution increases or reset and rollover features in their plans are sort of tied. There's nothing for them to really use within their equity platform, and they tend to come to us for some help. And we've been able to do that over the years. So we developed our application, and we've been using it with a number of clients that are very happy with it. It's a more consistent output with some detail and summary behind each one of the calculations. It is in an Excel format, and the details can be at a participant level. And we actually like using it at a participant level because that helps us with modifications, and it helps you to understand how the modification might have been created or the impact of that. And then we also provide with summaries at department level or other user type levels, country, locations, etc. We've also reduced the time that it's required to create the expense on those complicated plans. It's more systematic. It captures the original and the modification records, and those can be based on the plan rules and client data that we would require from you for input. And that's typical of a rollover where the fair market value at the purchase is lower than the determined fair market value at grant, and it may cause that your plan rolls over or resets. And so our new application allows us to see those individual transactions more on a systematic basis. It replaces our prior expense support that we had for clients, which was more of an Excel file, very prone to human error because it was manual formulas, a lot of changing of those formulas, input of different columns, and so on and so forth. And so we're trying to get away from some of that. The application actually works in a way where the client, being you, would provide us with your plan and some other documentation and a questionnaire that we ask you to complete. And that way we can do an evaluation of what your plan really has within it. A lot of times we hear we have a very simple plan. We take a look at it and determine, well, it's simple, but you have a rollover feature. And just because you've never used it doesn't mean that it can't happen. So we have to take our own internal review of that and determine what exactly you have. The next step is we provide you with a standardized input file or source data along with instructions both in paper and or soft copy, I should say, and a web meeting where we'll show you what we're going to require from you based on your plan and how we're going to use that data. We then take the data that you provide us, and you would do that on a quarterly basis via the secure email. We use Elite File System. And we would take your file, or we could even use some of the reports that your equity platform may produce relative to your ESPP purchases, in particular like a purchase report when the actual purchase has been made. Okay, so next we take that file, upload it to our application. It's an access-based application. And we then produce in the background the calculations for the Black-Scholes valuations for each one of the purchase periods. We estimate the shares to be purchased, and we estimate the expense in total by the reporting period. And that would include forfeitures if forfeitures are applicable to you. We then review the output that the application provides to us for completeness and provide that back to you via the secure email once again. Okay, and I think we just, okay. Next, the client would provide us with the actual purchase detail following the actual purchase date, and then any updates for the period that would be required for modification. And that would be something like a contribution increase if your plan allowed that. It also would include terminations. We upload that information into our application, and we create the modification records if those are applicable. And we also provide the true-up for the actual purchase itself. And the reports look very similar to the estimated reports, and they provide some additional information to you about how the true-up was actually calculated. And we did just get a question in. I'll try to clarify this. The question was, could I clarify what a rollover feature is? Sure, I'll try to give the quick answer. A rollover feature is very typical with a longer offering period, such as a 24-month offering period where there might be 4 quarterly purchases within that offering. And in the event that your price dropped from the original offering date, or the fair market value on the offering date was significantly higher than the actual price at the purchase, it's common in those longer plans that the rollover allows for the purchase to take place on the purchase date, but everyone is withdrawn from that plan or that offering and put into a brand new offering period for, let's say, another 4 purchase periods. So that's the definition of a rollover. A little bit different than a reset, where the reset simply resets the grant price for the remaining purchase periods in that offering. So I hope that answered the question. Okay. We also provide you with key data for your auditing needs. We would provide you with documentation about the application for the auditors, as well as provide back to you all of the source data that you provided to us, so that you have a reference all in one file there. And then we are also available to answer questions for you if you should have any from your auditor. And another question has come in: when true up? Okay, do you consider only the actual payroll contributions versus the estimate, or does it refer to the actual number of shares purchased? No, we look at the actual purchase cost. So we look at the dollars that were actually used to make the purchase versus the dollars that were estimated to be used to make the purchase. You can't really look at the shares. That's not a true application of the true-up. It's really the cost of the shares that were purchased versus the estimated cost of those shares that were being purchased. Okay, next, I want to go over some of the key functions of the application for you, and this is referencing the basic plan or the simple plans, if you will. Let's say a 6-month plan, or 6-month offering, 6-month purchase, no reset, no rollover, no ability to increase your contributions. So a pretty basic plan. The expenses on a straight line basis. So each purchase period within the offering is expensed individually based on the information that you've provided to us and your expected terms and volatilities, etc. The estimated shares for the purchase are determined using your estimated contributions that you give us by person, and any company imposed share limits as well as the IRS 25K limit in whatever method you're using, whether it be the liberal or the conservative approach. And then again, the application will come back at the end and true up using your actual purchase cost versus the estimated purchase cost and the original fair value of the purchase record itself, that Black-Scholes value that's determined at the grant. For a more complex plan, where we have modifications, we have to also include the contribution increases and decreases. And decreases are really not trued up, but we do look at those because it helps us to identify when an increase has actually occurred, especially in plans where there are multiple opportunities for the participant to increase or decrease contributions during an open offering period or a purchase period. So right now our application is looking at increases that are allowed in the current purchase period as a modification on the next reporting date in the purchase itself. So as an example, if the increase was effective on August 1st, we would start the modification on October 1st. Right now, that is a phase that we're, the next phase of the application that we'll be working on to determine the modification for an increase on the exact increase date that the person made that change. But for ease right now, we are picking a date in the next reporting date and applying that as the modification date. Increases that are allowed in the next period, those are being modified effective with the next purchase begin date. And then decreases, we do capture those, although they are ignored, but they do assist us in understanding how much someone changed their contribution if there are plans where you can increase and then decrease and then increase. With multiple changes during a period, there might be a need to know exactly what that level was, and therefore we do sometimes need to look at that decrease as a reference. Okay, let's get to the right. Come on. Charts are not moving, Shauna. There we go. Resets and rollovers, again, we're going to base this basically on your plan rules, but there would be a second record created within the application for the individuals that are in the purchase period if they had a reset or rollover in their particular period. So we would show you the before and after valuations that are created on the Black-Scholes basis. And then we would also show you the incremental expense as a result of that. Obviously, multiple rollovers can become complicated, but we can, in fact, accommodate that. Just a little note on the bottom there that our current application can't actually combine yet a contribution increase and a reset and rollover all in the same period. But we do, in fact, have the ability to take a look at what that would be on a material impact basis for you. Generally, what we have found is that contribution increases tend to be immaterial, and that the reset and rollover might be more material. So we'll be able to analyze that for you and give you a sense of where to go and what you might want to capture in the expense. And another question has come in that do you typically reduce estimated numbers of shares to purchase expense perspective when you have a mid-purchase period decrease in contributions? Not sure I understand that question. So what we'll do is we'll try to take that offline as soon as we are finished here today. All right? Okay. So what did I reference when I said client provides inputs for us? To do the estimate, we need to know some key elements from you. And this might be a little bit tough to see on the screen, and they are somewhat color-coded. I tried to do it that way, but there are a number of things here that we are going to require from you. The first two things that we need to identify are exactly coming from your plan rules itself and your historic company information. And that would be the definition of your offering periods, the begin dates, the end dates. If you have a look-back feature, the beginning price limits, fair market value on the date of the offering, and what your discount is. Additionally, we're going to need your purchase date information. And that gets into the more finer elements of your purchase itself. What are the begin dates, the end dates, any share limitations, forfeiture rates, and of course the expected term. Then we need data relative to your individual participant contribution levels. And we need to have an ID or an employee ID that is unique for each record. And any user-defined fields such as a department or a country, etc., as well as termination dates if someone terminates later on down the road. And then we also need to know for that individual what is their contribution level that they have chosen, what's the percentage, and what's the estimated contribution dollars for the period that we're going to actually be estimating the expense for. We also ask that you provide us with a breakdown of what your reporting periods are going to be. We can accommodate right now a number of different reporting periods. We've based this to look more at a quarterly basis, if you will. So we will, for a 6-month purchase, you might have 3, maybe 4 quarters that you're reporting on, depending on how the dates fall in your purchase. So we require those inputs from you on the quarterly basis. And then we also produce an output for you. And this is a small sample of what the output looks like. It's a pretty long Excel file that has a lot of data in it. But it would include the detailed worksheet. And the detailed worksheet would show you at one row for each participant, the purchase date, their contribution amounts, the estimated shares before any limitations, the fair value, the estimated shares after the limitations, the total expense, and then it breaks it down in each quarter for you, each current period, so that you can see what your quarterly amount is by person. We also provide you with a summary page, and the summary page allows you to see it at your defined level, whether it be department, country, etc. There is also a Black-Scholes valuation calculation that's also in the background and provided to you as well that shows you how the Black-Scholes valuation is calculated. When the purchase occurs, the 2 pieces of data that we need from you, again, is the unique ID for the individual. And we need to know if they terminated, and then we need to know what were their actual purchased shares and purchase price on that particular purchase date. There are some equity platforms that will produce that information for you, and you could simply give us that report. But those are the key elements that we need, and we need to make sure that we have the employee ID that matches the original employee ID as well. And then for the true-up output, it's very similar to the estimated expense output, with the exception of a number of columns that we add to the actual spreadsheet to the right. And again, this defines for you all of the additional details relative to the true-up, the number of shares that were actually purchased, the purchase price, the actual purchase cost, the difference between the actual purchase cost and the estimate purchase cost, the reason for a true-up. We have some definitions that we provide, and then the actual true-up itself. And that is then flowed through to the summary page for you. Okay. Now, we have more that we could share with you. Again, this is a very high-level webcast just to give you a sense of what we have available now in this new application. If you wanted to learn more, you could certainly give us a call, and we could do a review of your plan and let you know what we think you're facing. There are no plans yet to put this out to a client level. It's really just something that we are using internally here at SOS for our clients. It is ESPP expensing is very complicated, as many of you may know. So there's a lot that goes on behind it, and therefore we're doing it here using this application on behalf of the clients. If you do need to contact us for any more information about the actual application, you can contact Scott McDonald in our sales and marketing department, and he'd be happy to get you some information and get some more details from you. And I don't see any other questions at this time, Shauna, so I will kick it back to you. I will get back to the one individual that had the one question I did not quite understand, and I'll address that individually with them.
Great. Thank you, Julie.
I take that back. We just got another question.
Okay.
From a comparative standpoint, if a company uses E-Trade's Equity Edge online application, what is our differences, advantages? That I'll take offline as well. It's not really something that I'd be prepared to answer on a sales call like this.
Okay. Perfect. Thank you, Julie. And thank all of you who joined us today and attending this Solutions webcast. We will send an email in the next few days with the link to the recording and materials. If you do have any further questions, don't hesitate to reach out to Julie Kenya, Scott McDonald, or myself. Thanks so much and have a great day. Bye-bye.